Dollar yen daily forecast May 1st, FXEmpire.com. The dollar yen pair has been a very interesting market lately. The technical outlook for this pair has seen wild swings in momentum, and many traders and analysts are out there preaching one thing last week and another this week. This is often the case when you have a potential trend change, and these things only happen a couple years or every couple years, I should say. And many people in the markets really have no experience with them, or very little at best. The pair had been seen blasting through a trend line that was on the weekly time frame from the financial crisis that went through right about here, and you can see that the hammer that had formed on the daily actually confirmed that we broke out and found support at it. But there's also other places that came into play. We had the 80, which was a massive support and resistance area previously, and in fact was a level that even kept the Bank of Japan down as the resistance was too great for interventions to push through. This ended up being, from the move up, a 50% retrace, so it's a very interesting place to see some type of support. Of course, for the Monday session, we just simply didn't get it. And while many traders would be very quick to sell at this point, we would be remiss if we didn't mention the fact that there is the 200-day moving average here as well, which long-term traders tend to pay attention to. Also, a 19 pip break of the 80 handle isn't exactly convincing. So at this point in time, we are still willing to suggest that perhaps the buy side is the right side. Selling is going to be difficult under here because the Bank of Japan will be down below somewhere, probably not right here where we're at, but somewhere lower, and very interested in seeing these prices go back up. After all, last week they did or for that matter, Friday, they did the asset purchase expansion in their program of 10 trillion yen. They are buying JGBs, which are the government bonds of Japan, the REITs, and the ETFs to try to knock down the value of the yen, and have failed so far. This is predicated partly by Ben Bernanke, suggesting that perhaps if the Fed had to ease, they could, and we are in a downward channel. However, in the bigger scheme of things, 80, the 200-day moving average, the long-term trend line, and such all trump this. So we are interested in buying signs of support. There is a sign of support at this point, as we have bounced directly off the 200-day moving average. Obviously, some type of algorithmic traders would have been involved, long-term money traders, etc. So we're comfortable taking a long position, but we would have to see maybe a little bit more convincing in the way of support on a 4-hour chart or something to that effect. Certainly the risk to reward ratio is much better to the upside than the downside, because once we start falling at this point in time, it's only a matter of time for the Bank of Japan gets involved.